Live in Miami Beach at iConnections, the Nasdaq and S&P rebounding from yesterday's losses, while the Dow notched its sixth gain in 7 sessions. That index now just 0.5% from its intraday high. The gains coming ahead of tomorrow's Fed decision on interest rates. Let's bring in Mike Wilson, Morgan Stanley's chief U.S. equity strategist and chief investment officer. Mike, it is great to see you. It's been way too long.
It has been too long. It's great to see you guys.
What's your outlook for the year in terms of the Fed and everything?
Well, look, we finished the year spectacularly well. I think some of that was very predictable. The election was less predictable. It felt like the market wanted to go there, and that we had a little bit of euphoria then around the inauguration. We've had more of a sideways sort of first half view based on 3 things. First, interest rates are probably still a bit too high. We don't think the Fed's going to cut, as much as maybe people were thinking a couple of months ago. And then there's just a lot of announcements coming out, right? It's not that they're bad or good. It's just uncertainty. And whenever there's uncertainty around politics, multiples tend to kind of come down a bit. And now we have this event yesterday. I wouldn't say it's an event, but kind of an evolution of this AI spending. And that, I think, is also going to create uncertainty. So, 5,500 to 6,100 is a pretty good range to think about probably for the first 3 to 6 months of the year. But under the surface, there's a lot of really good things going on. I think Brad was just talking about it. We agree. Software has been kind of left behind. We sort of made that call back in September that software would benefit as there's kind of movement from semis to software. That's a big one. Financials is another area that's been spectacular. Consumer services, and then media and entertainment. So there are plenty of things to do on the long side of this tape.
Right. I mean, the AI trade has been so sort of complacent, people just putting money there and it just staying there. It sort of sucked all the oxygen out of the other areas in the market to some extent, to the extent that the action yesterday indicated that the air was coming out of the AI trade and the rest of the markets were holding up pretty decently. I mean, your takeaway from that would be, I would think the AI trade can go away and the rest of the markets can actually be okay because money would be reallocated.
Yeah, the breath was the best breath we had in like 2 years.
Right.
And yes, it was a down market. Now, remember, unfortunately, typically when you get a shift from market cap weighted to, say, equal weighted or better breath, it usually happens in a down tape initially before the next leg higher. And we think we're going to go through that transition. There's it's an interesting sort of comparison. We think the government has been crowding out the private economy in many ways. And so the government, we can talk about Doge if you'd like, but if they're able to shrink the government and the growth of the government, that can actually be liberating to the rest of the economy. Same thing for AI CapEx. That has crowded out other IT spending and other types of spending. So if that just calms down, by the way, it's not going away. Okay, if it just slows down a bit, that may free up spending of other kinds, which could be beneficial for other parts of the market.
There have been a couple times over the last year where moves in the bond market, rates to the upside, have derailed the broader market. It's happened 3 or 4 times. Is there a rate where, maybe it's 5%, where things might get dicey for a prolonged period of time?
I think that's right. So 450 we identified as sort of a magic number. I mean, there's some math behind that, but that's where multiples would start to, have trouble. And that happened. We saw the correlation between stocks and rates go negative when rates went through 450 when Powell's a little bit more hawkish. And by the way, he's going to speak tomorrow. 5% is kind of a magic number where it becomes, not just a gating factor in valuations, but maybe as a growth inhibitor as well. We're not there, but that would be something that would probably make us, maybe a bit more concerned that it's not just going to be a rotational market, but maybe it's a bigger correction.